Tesla and Musk have been in the news every month for a very long time. Just a few years after being public, the company has already experienced a stock split, and there are reports that a second split is imminent. Top analysts and investors have a large following of Tesla stock due to its attractiveness. Cathie Wood, CEO of ARK Invest, is one such investor. Despite having made substantial financial gains from the shares, she has been a bullish investor in Tesla since the beginning. However, 2021 wasn't a good year for the company. Despite her belief that her company is being targeted, Cathie Wood thinks Tesla's stock, which is currently valued at $1,500, will reach $1,500 in 2022. Who is assaulting Cathie Wood, and why is ARK Invest the target? In today's video, let's hope. Tesla stock attracts more attention than any other on the market. The company is regarded by many as the most significant inventor of the 21st century. Critics speculate that the stock's explosive climb could prove to be the ultimate bubble. Bulls in Tesla have this far won out. The stock saw a roughly 750% rise in 2020, closing at more over $700 per share. Bulls, though, aren't certain that the good times are done. Wall Street analysts have high hopes for Tesla's future. Yahoo Finance now has a price objective of $1,833 per share for the top analyst, which is more than 50% higher than the stock's 2020 closing price and more than 25% higher than the automaker's current pricing. Cathie Wood's 2021 took a bad turn in December when investors abandoned her underperforming tech shares, sending her ARK Invest exchange traded funds plunging in high volatility trading. The flagship innovation ETF from ARK Invest dropped more than 10% in December and is now down 23.7%, which puts it in bear market territory. Wood has 8 important ETFs, 6 of which are now negative for 2022. That while ARK FinTech Innovation was down about 15, ARK Genomic Revolution was down more than 30. Last year, Wood, the CEO and creator of ARK Invest, became well known as an investor. ARK's ETFs made significant wagers on cutting-edge technologies such as 3D printing and banking, and they produced excellent returns. Due to government and central bank stimulus programs, investors were flush with cash and poured money into flashy technological brands. It was anticipated that ARK's innovation ETF would return almost 150 in 20. However, as global central banks have started to get ready to turn off the stimulus taps in response to rising inflation, many of those investments have started to falter in recent months. Concerns over the Omicron model are also present among investors. It will probably take many years for many companies, especially those in which Wood specializes, to start turning a profit that is sufficient. Given the expectation that central banks would raise interest rates in the upcoming year, these companies' long-term profitability are starting to seem less attractive when compared to other segments of the market. According to Saxo Bank Chief Investment Officer Steen Jacobson, investors will face less fiscal and monetary stimulus in 2022 as the Fed reduces its bond purchasing activities and removes liquidity. Furthermore, he continued, it suggests that high growth businesses, which are solely dependent on low rates and significant top line growth, are clearly suffering significant harm. Square, Coinbase, and Teladoc have all seen sharp declines in value. If not for Wood's significant wagers on Tesla, which has increased more than 40 this year, several of her funds will be performing much worse. Wood is upbeat in spite of the fact that investors are pulling out of ARK funds. She stated to CNBC last week that because the traditional Set 500 mainstays prospects are less optimistic, they are in a bubble. We don't lead sheltered lives. We would have grand ideas if we were. I think our belief originates from the fact that we haven't started paying creativity for what is coming to happen, she said. Seen in a broader context, things don't seem all that bad. The average annualized total return for ARK funds over the preceding 5 years has been approximately 30%. Investors should keep in mind ARK's premise, says Saxo's Jacobson, but he thinks the funds have a promising future. The idea behind the fund is not to beat the S&P or the NASDAQ. Rather, is to hold the view that the future is technologically advanced and that you have to buy a lot of lottery tickets to be a part of it. After investors pulled out of ARK Invest, the company has come under scrutiny. After the ETF had a stellar record through the beginning of 2021, Cathie Wood made 2 significant macroeconomic decisions that could be detrimental. First off, Wood anticipated a sharp decline in commodity prices in May 2021, but this did not materialize. She said she would be shocked if oil prices returned to $70. Second, Cathie Wood said she loved the situation after the month-long slump in technology stocks. She projected a 15% annual compound rate of returns, and she had anticipated, following last year's price cut, a 25-third return. Investors in ARK are terrified after the 2021 loss. According to regulatory documents, Michael Burry increased his bet against Cathie Wood and increased his investment against Elon Musk, up from 800,000 shares. 3 months prior, Burry's Scion Asset Management had pessimistically put options on over 1.1 million Tesla shares, valued at $731 million at the end of June. Musk and his electric car firm have been accused of making excessive claims and falling short of fulfilling them. Additionally, he has predicted that Tesla's price will plunge and that the company's worth is unsustainable. Conversely, since the start of 2020, shares of Tesla have increased by more than 7 times. Additionally, Scion revealed that as of June 30th, it had put options on 235,500 shares of the ARK Innovation ETF. With Tesla as its top holding, Wood's flagship ETF has more than doubled in value since it launched in 2020 and invests in growth companies including Zoom, Coinbase, and Shopify. In a since-deleted tweet, Burry asserted that Wood's predictions of disruptive growth and transformative technology will not materialize. Burry continued by saying that ARK defines an era. If you know your history, you can make sense of this. That's bound to happen again to you in the event that you don't. In the most recent quarter, Scion changed its portfolio in a number of notable ways. It bought call options on Walmart, Mckesson, and Cardinal Health, as well as Discovery stock. Nonetheless, it did sell its holdings in Zmworks, Meredith, and Occidental Petroleum. Over 900,000 Tesla cars were delivered in 2021, a significant increase of more than 45%. But in 2020, the COVID-19 epidemic undoubtedly had an effect on both purchasing power and production capacity. The majority of investors expected even higher returns in 2021. Many analysts predict that Tesla's market worth will surpass $1.4 trillion, with a share price of $1,500 that might occur by the end of 2022. But according to analysts like Cathie Wood, a few things need to happen before shareholders receive a payoff this substantial. Let's examine some of the most important goals that Tesla must accomplish. First of all, investors like growth. The quantity of cars that were delivered is the most obvious measure of Tesla's performance to customers. Thus far, a robust and committed customer base has guaranteed that there will be a significant market for Tesla vehicles as soon as they go on sale. The biggest obstacle has been production capacity, which Tesla has made an effort to address by building more manufacturing facilities worldwide in an effort to bring cars closer to the point of sale. The Berlin and Austin facilities are nearly finished, and it appears that Tesla has found out how to handle production capacity. Furthermore, Tesla is aware that its cars are necessities in the industry. The company needs to get into international markets as quickly as feasible in order to capitalize on the value of its brand. The trick is knowing how to do it as efficiently as possible. For example, Musk has expressed his desire to establish a foothold in India, a sizable prospective market. Amid speculations last week that the Indian manufacturer Tata Motors would work as a subcontinental contract factory for Tesla vehicles, the company's stock shot up unavoidably. Tesla will become more popular, but the automaker needs to go cautiously. It might be devastating for the firm to sacrifice quality in order to get cars out the door quickly. It's a slower rate of growth. Meanwhile, runs the danger of allowing rivals to get into lucrative areas ahead of you. While it might not endanger Tesla's dominance in the industry, in the long run, this could stop the stock's ascent. At last, it seems that investors in Tesla have learned their lesson from the Bitcoin frenzy. Over the course of the last 10 years, a large number of Bitcoin investors have acquired and held on to their tokens despite price swing. This way of thinking has been crucial to Tesla's enormous share price increase to date. A significant gain is imminent if those core owners hold on to their shares regardless of what happens. Do you believe Tesla will be able to hit 1,500? Please leave a comment below.